with a Haven bid on. What are our technical chartists seeing? Let's check in on Ron Acoba, the founder and chief investment strategist at Trading Edge. So good to see you, Ron, and welcome to the program.
Thank you for having me, Miss Kathy.
So I know you've got some charts to show
Yeah.
us and make sense of it all with all the Trump premium and the Trump factor. Let's take a look at the PSEI first and see how that's done. Not very pretty, as you can see the decline here on the chart. It's really been on a declining trend, and it's not very encouraging, is it? Since the start of the year, maybe 6-7% down. Where has my money gone? Oh my goodness! I mean, are we going to see a pivot right there? What are the charts telling you?
Well, currently we're actually still riding a 20% drawdown since it peaked at 7.5 back in October last year. So in the very, very near term, given the fact that it's still tracking a mid-run downtrend, the bias may a little bit still be pointed to the downside. The silver lining, though, is that if you look at the PSEI from a longer-term perspective, you can see that it's actually nearing the lower band of its 4.5-year trading range, which suggests that a floor maybe. We may be nearing the floor already.
That's what we're looking for, the floor. Yeah. So there is a pivot there. I mean, what's the level right now? Because we're below 6,000. So
the floor where the PSEI managed to bounce at least 3 times in the past 3 to 4 years, we're somewhere around 5,700 to 6,000. We're at 6,000 now. So I'd say the downside may be limited to maybe just 300 points, if any. So
well, let's take us back to memory lane there. You mentioned like 6-7 years, but I'm going to take you back to the midterm election years because it's a midterm election year this year, as it was back in 2018, 2013, and 2007. Make that 2019. And you see a double-digit gain there just before the global financial crisis, right? I mean, that's a double-digit gain there. It seems like this year is going to be an outlier.
Well, so far the index is down, but we're still early in the year. And like I said, the bottom may already be nearing. There are a lot of catalysts that may be in effect moving forward, which will enable the index to finally recover, perhaps in the second half of the year. Midterm elections is one of that. A possible cut by the BSP and the U.S. Fed may be one of those catalysts that may finally prompt investor interest to come back in the market to perhaps lead to a rally during the second part of the year.
Well, ever since the non-move by the Bangko Sentral on the key rate, not the triple R cut, I've seen the peso just strengthen to the 57 to the dollar. Let's take a look at the chart here. You said move sideways, but it's been like strengthening every time I open the show. So it's like 57 to the dollar there, bouncing up and down. But I have heard from city economist Joanna Chua that there is a chance that it may pivot and may weaken. Is that what you're seeing in the charts?
For me, what I'm seeing is it actually has a chance to pivot, the US dollar to peso exchange rate to pivot lower, meaning the peso to strengthen against the US dollar. As you can see from its chart, it's just generally moving sideways, but somewhat relatively strengthening bit by bit relative to its 59 high. The key pivot is actually 57.50, and should that level gets violated, then we may see further downside for the exchange rate, meaning further strengthening for the peso. And one of the cues that may lead to a downside in the exchange rate is the recent decline in the U.S. Treasury.
That's true.
Treasury
That's true.
note.
You know, we've been monitoring that. Let's take a look at the U.S. Treasury yields here. Ever since Trump said, "I'm going to bring this down," the long end of the curve, everybody's just been so fixated with the 10-year yield in the U.S.
Well, for me, its recent movement is actually significant because it actually marks a pivot relative to its uptrend that we saw since the start of last year. So its decline below the 4.4% level may actually lead it to come down to perhaps 4% in the next few weeks or few months.
So what is that going to do then for our local 10-year Treasury? Because it's been following suit, right? Well, I've been seeing a decline as well.
Local treasuries actually just track the movement of U.S. treasuries, obviously with a little premium on how the U.S. is doing. So if we see, for example, U.S. Treasuries decline to 4%, then we may likely expect local yields to decline as well.
Okay, we got about a minute here, and I got to put this in because it seems like this is where the fun is.
Yes.
It's in Bitcoin. Oh my goodness. Look at that fund there. The fund started when it hit like 110,000. We
Yes.
started the show at 110,000, and now I'm seeing like a 20% decline. Oh my gosh, that's painful, isn't
Well-
it? I mean, for people who've invested their money, that's like a 20% drop.
Well,
Ever since Trump came to power.
if you want to be optimistic about it, if you look at it from a 1 year to 2 year point of view, it's generally still tracking a long run uptrend. But in between, you can see the fluctuations, right? 20% up here and there, 20% down here and there. So right now, it appears that that Bitcoin may be entering a corrective phase after it reached a high of 108 to $110,000 per Bitcoin. Given its decline below its key pivot level around 92 or $94,000, we may see it fall, unfortunately, to perhaps 76 to 80,000 in the very
you
near
gotta
term.
have a strong gut
I
for
know,
those
right?
fluctuations. It's like, oh my gosh, we're not used
Yeah.
to this. So where are we supposed to put our money then?
Well, if you're on the conservative end, I saw your recent interview with BDO Cap's chief. I agree that bonds remain to be a good investment vehicle to go into. Why? Because while rates may have come down relative to last year's high, it's still relatively higher, generally speaking. For example, 1 year a bond yield locally it's still doing what, 5.7, 5.8%. Obviously, the longer tenor offers a higher yield of perhaps 6 to 6.5%. Corporate bonds even offer as a high of 7 to 7.5%. So with that, it's actually if we see interest rates going down, let's say in the second half of the year, then locking those relatively high yields, it's actually an opportunity to do so at the moment. If you're on the riskier end, then you don't need to look any further. The PSEI, like I said, is trading near the bottom of its 4 to 5 year trading band. So, and I said, even if we see a downside, I think that it will just be limited to just 300 points or maybe 3 to 5%. With all the things lined up during the second half of the year, we may see finally a rally, at least to the midpoint, which is what, which is 6.6 or 6.7, which is 10% from where it is doing right now.
No right or wrong answers. Really depends on your risk appetite.
Yes.
Well, thank you so much, Ron, for joining us. Appreciate the time and the
Anytime,
assessment.
anytime.
As always, Trading Edge. Ron Acoba there joining us.